It says we're live.
Okay, so I'm Jessica Hines with eXp Realty, and I live in Sherwood and work out of Sherwood and cover some part of Washington County and Yamhill County. And I have with me again today and every Friday on Lives, Angela Keith with Stearns Home Loan. And we are here to discuss forbearance and what that means, what's happening. It seems like it's constantly changing. But here's all of the nitty gritty. So let us know if you have questions and we'll get started. I do have some questions that came in from people that we'll make sure and get answered. But yeah, so what does forbearance mean, Angela?
Okay, so a forbearance, if you've ever had a student loan, you've probably applied for a forbearance, which just means a delay in paying back a debt that you owe, technical for what it does. So when we're talking about mortgages, it's the offering of your mortgage company or your mortgage servicer to have a kind of like a pause button on what your payments are. So you can pause it for anywhere from 1 month. On some programs, they'll actually do it for an entire year. And this is just new information coming out. Each servicer is different. Each loan company who owns it is different. Each type of mortgage has a different way that it will be done. Mm-hmm. So there's not one blanket overall how it's going to be, how it will affect you or how it's handled. So what your neighbor, again, might be doing on their forbearance is not going to be the same as yours.
Right.
Because you might only need 1 month, 2 months. The most important thing is if you can pay your mortgage, pay your mortgage. Don't do it out of convenience to skip a mortgage payment or two. If you're skipping a payment or two, making sure that you have the ability to pay it back, because on some of them, and it's changed every day. When it first came out, it was you can have it forbearance for 3 months to 6 months, and then you have to pay it back in full at the end of those 6 months or at the end of those 3 months. So you're not making payments for 3 months to your mortgage. Then at the end of 3 months, they want their money back. Right. And it used to be, that would be the entire amount you would have to pay back. So if you had a $2,000 mortgage payment and you missed 3 months, at the end of 3 months, all of a sudden you have to come up with $6,000. Well, if that's the case, then you should have just kept making the mortgage payments. Some are taking partial payments. Some were not taking any payments. Some, if you put a partial payment, it wasn't accounting. Some people automatically went into forbearance, even though they didn't ask for it. They were making their normal mortgage payments, and now they're late a mortgage payment when it came out of forbearance because they didn't count it towards their mortgage balance. I've seen it all across the board for different clients. They've had different things happen.
Yeah.
Getting clarity is extremely important. When it first came out, there was the scare that if you didn't pay it back after the end of 6 months or wherever your forbearance laid, that they would give you 12 more months to make that difference up. Well, so whatever your 6 months of payments were, if you had to pay them, so that'd be $12,000. If your payment was $2,000 a month, that $12,000 would then get averaged over the next 12 months of your payments. So you'd have your normal $2,000 mortgage payment plus now $100 every month on top of that. So your $2,000 mortgage payment is now $3,000 for a year. So in some of cases, that was what was happening, but it wasn't being described in its entirety to the client. And you've got to have clarity and clarification, get things in writing, and really make sure that you understand what your forbearance is. Rather than, I've had a couple people take it and they're like, well, I don't have to pay my mortgage. It's great. Now I've got some free income. They were still working their normal hours and they were just spending the money on other things. And they're going to be in a world of hurt when it comes time to make that payment. Some mortgage companies are just tacking it on the end of your, say you just got your house, you have a 30-year loan. Some are just tacking that on to the end of your loan. So now it's, 30 years and 6 months or whatever it is tacked on.
Right.
It's different for every client. It's not a blanket, one forbearance fits all. And that's where you want to research and check what it is, because it's very important to make sure it doesn't affect your credit, because they can now, if you don't make those payments and you're behind and you don't reach an agreement, well, you owe them, all this money. You got to pay it back. And if you're forced to sell your house, they were making it to where you couldn't refinance or sell your house for 12 months after you reinstituted your payment, which we restarted your payment.
Right.
So it's a little scary to see what people are not understanding or getting the clarity from the people who are issuing forbearances. I'm starting to see a little bit more clarity, and people are at least going, hey, what's going on?
Right.
But it's scary to see that you could easily lose your home, if you're not making your payments correctly and you don't understand it, you don't get the payments put back correctly. They
Right.
did just lift it on Monday. The newest update came out that now if you resume your normal payments, once your 3 payments are made and you're out of forbearance and you've made 3 payments on time, you can sell or refinance your house. So that's a nice little thing because, we want to take advantage of the summertime, which is the hot time to sell your house.
Right.
Um, Especially with the rates what they are, sometimes it's a great idea to sell your house and then, maybe make that move up, or refinance, depending. But just making sure if you don't need it, don't take the forbearance, because it can get you behind. So it's a game of playing catch up, which is never fun.
Yeah.
Catch up a little bit on fries, not any other way.
Yeah.
I'm
And I
corny.
think this is probably difficult for the lenders as well, because to be in the situation where they're probably doing more forbearance than they've done in a while, and because it's a different kind of reasoning
Mm-hmm.
for it. It's not just because, economy or things like that. It's, worldwide pandemic. So different rules are constantly changing, because as a whole, we're wanting to help people to get through this time without losing it all,
Right.
So I know that they're constantly getting updated on this is how we're doing it. Like you said, Monday came out to where it's 3 months from a year. So they're trying to figure it out and make new things to make it so people aren't going to be losing
Mm-hmm.
it all. So,
So we don't reproduce 2008 again. And I
right.
think it's fantastic for a lot of people. It's horrible for some people, and it's not needed for vast majority of people. Our unemployment is the highest it's been in a long time. Uh, so if you've lost your job and the unemployment's not enough to cover what you need, you work that out, and maybe take what you could have made for your mortgage payment and put it in savings, so that when your forbearance is there, you're not so far behind.
Yeah.
um, because I'm not sure if companies are allowing you to do a partial payment and have it count. That's one
Yeah.
thing that I haven't been able to get clarity on is, what if my mortgage is 2,000 and I can pay 1,500?
Right.
Can we have that 500 in forbearance? Will they count that, or are they going to count that as a 30-day late period that
Right.
payment
Because it wasn't
has
paid in
to
full.
roll?
Right.
So if you are in forbearance and you can set any of it aside, try to do it, just to reduce the impact when you restart it.
Yeah.
Because
And we understand
honestly,
people are in uncertain times and not knowing, job
yeah,
security. I think things are kind of coming on the other side of that. But, when this started, you just don't know what's going to happen if you're paying your mortgage and then you're not having money to buy groceries for your family. I mean,
yes,
I get it. I get it why you would choose to, I'm going to not pay that mortgage.
I like to
I
eat.
don't know if I'm going to have a job in 2 weeks.
Yeah. It's
So,
understandable. And I think that was the panic that happened in the first, and there was a huge onslaught of forbearances happening, and it overwhelmed the system. So then
yeah,
you typically get hit with harder conditions. And then as it's eased up and there's been more clarity on how this is going and a little bit of rephasing happening, it's it's going to continue to change and it's going to continue to go. But again, I agree. If it was between my mortgage payment and feeding my kids, I'm going to feed the kids.
yeah,
Because this sounds horrible, and you don't want to say this in the industry, but I can rebuild my credit. I can't refeed a child that hasn't eaten. I mean,
right.
it's a little drastic and dramatic of a statement, but obviously everyone's in a unique situation, and you make the best decision with what you have.
Yeah,
Um, and what's the age old saying? 90% of the population is one paycheck away from a bankruptcy. I mean, or being
right,
home. So there's been some great things that came about where you can't get evicted, moved. You got some security that at least you have a roof over your head
right,
until we can kind of weed through everything that's going on, because none of us have an idea this is how this is going to end up in the long run.
right. How long it's going to take to
Yeah,
get back. Yeah,
yeah.
it's gonna be a while, and so that uncertainty can be scary for sure. Yeah, definitely.
But I think just read,
Mhm.
look it all up. We're going to put on the bottom a link to some of the places that have good
Yes.
good information. Your servicer, whoever holds your mortgage, that's your servicer, whoever you make your payments to, they're going to have their own dedicated website that gives information about the forbearance. Dig up that information there. What we sent is the consumer finance, which has a lot of information about the CARE Act and what is actually happening for forbearances. Do I need it? Do I not need it? One of the things that they say at the very beginning is, if you can pay your mortgage, pay your mortgage. I mean,
Yeah.
That's what they want. It's lengthy, but it's got some great information. There's credit card debt relief. There's student loan relief. A lot of student loans are automatically being thrown into forbearance without clients doing that.
Yeah, I didn't even, I have student loans and I didn't even, I'm like,
Did you
oh,
go check?
it's not coming out. It just stopped.
Yeah.
I mean, they just stopped taking it. Yeah.
They stopped taking the payments, and it's a little alarming because you're like, but I want to get rid of those dang things. If I can make the payment, I want to get rid of them.
Yeah.
So yeah.
They did send me a message, I think last week, saying an option, if you still want to continue to make your payments. I'm like, okay, good.
Oh, good. So they did change it where you have options now. That's good.
Yeah.
I just told all my clients, go double check, restart them if you can, especially if you're in the middle of a mortgage process. If your loan goes into forbearance and all of a sudden on the credit report, say your monthly payment is only $35 a month, but your balance is $7,000. Well, if it shows a zero payment and forbearance on the credit report, we have to hit you with a $70 a month debt. Even if you're in forbearance, we have to count that debt against you.
Right.
So just kind of watch that before you apply. Tell your loan officer, hey, I have student loans. They will ask questions. Are you currently in forbearance? Have you always been in forbearance? Is this the new forbearance? What were your payments before? Let's reinstate the payments, because it will make a difference on your debt to income qualifying for a loan.
Yeah. Yeah. That's good to know, as many people have student loans. All right. So I did get a couple questions.
Okay.
On the topic, let's see if there's one that on the topic that we're on now. We kind of went over, when are forbearance payments due, or does it depend on the loan company? And again, you said it depends on the loan company you have, and you'll need to look into that specific. And you should be able to find most of the information just via web for your, if your loan is through Wells Fargo, whatever, what the forbearance process would be with them.
Absolutely. And I'm a big proponent for getting things in writing. You might call them on the phone and they might say something, but maybe you misunderstood it, or maybe they told you the information in a way that sounded different than what they meant.
Yeah.
Firm believer, get it in writing. Another reason is if you have it in writing that this is what was agreed upon, makes it easier to untangle things later.
Right.
If something went wrong. So big proponent, always get it in writing. Always. If you call them and talk to them and say, okay, please email me that so I make sure I understand that. Email me my information, mail it to me, whatever it is.
Yeah.
Make sure you have that information in writing.
Yeah, in writing. Very good policy. Okay, so here is a kind of a new topic, and I know I've heard a lot of, stuff on this, and I work with several investors and investment property owners. So any difference if I have rentals and take a forbearance, worrying about tenants not paying rent, and so therefore taking a forbearance would be nice for that situation, but setting the money aside if they are paying rent so they can make the balloon payment if it's due at the end. But is there any differences as far as on investment properties and things like that?
So that'll be interesting to see, because again, it's each servicer. A majority of the loans in forbearance are FHA, VA, USDA, federally backed loans. Mm-hmm. There are some conventional loans which is you typically have a conventional loan for a rental home. So there's an interesting, if they're not making the mortgage payment or the rent payment, because you can't, this is the other flip side. If you're a landlord and you have a renter and they don't make the mortgage payment or the rent payment to you, you can't kick them out right now.
Right.
They're not in breach of contract because they're the stay-at-home order. They have to stay. I'm not a lawyer. There are legal things that you can do as well, but you want to check with a lawyer before you do that.
Yeah.
As far as your payment, I mean, if you can make the payment, do it. If you are in forbearance, definitely take the payments and put it aside so that you can pay in full when it comes out. The worst thing I'm worried about whether or not there's going to be impact on people's credit showing mortgage lates, which is going to be detrimental to your overall credit score. And it's
Right.
hard to bring a score back up once it drops really low. There's a lot of things you can do, but a mortgage payment being late is such a huge impact that you want to avoid it as possible. Now, since it's in forbearance, they're not counting it as 30-day lates, but we will see what happens when you come out of forbearance, you can't make the payment, and you're now 12 months. You hear verbally that they say it's not going to be a 30-day late on your mortgage. But what it looks like when they report it will be different, because I've already seen one credit report that came in where someone was in forbearance and they showed a 30-day late, but it showed that it's in forbearance. So if it's in forbearance, it's supposed to not be late.
Right. Yeah.
So I'm curious how it's going to be reported. It was very early on when the forbearances were happening that hits. So I haven't, it does show on your credit report. That's the other thing, is it does show that you're in forbearance. It's not something you can hide from us. It's not something you can hide from the loan. We'll see it. We'll find it. Mortgage statements show it. And right now, if you're in forbearance, you cannot refinance your house. And we're looking into whether or not you can sell your house if you're in the middle of forbearance. I don't think you can get another loan again with some of the parameters that we're seeing if you sold a house in forbearance. I don't know what that's going to look like.
Yeah.
We haven't seen that yet. We haven't seen what that's going to translate to. Now, granted, forbearance and COVID rules are updated sometimes daily, which makes us all crazy, but I'll be curious how that actually turns out, whether it shows up on the credit report as late. And if you can't make that balloon payment and they tack it on the end of your mortgage, or they make you pay it over the next year with a higher mortgage payment and you can't refinance out, they were initially saying, but now they're saying 3 months in, and who knows if that changes in another month or two, if you can even do it then.
Yeah.
It's just, it's uncharted territory. And so there's no definitive, this is exactly what's going to happen.
Yeah.
Because we don't really know yet until it happens, and somebody's going to be a guinea pig on it. And if we can avoid you being a guinea pig on a loan, please.
Yes, no guinea pigs. Try. Yeah. It is. It's, I mean, there's so many unknowns. It's hard to give definitive answers on anything with it changing all the time. And yeah, it's, if you can make your payments, make your payments.
Yes, if you can. If you can't make the full payment and you're in forbearance, tuck as much aside as you can, so that when the balloon comes due, hopefully you have enough to get it caught up. Because that, yeah. I mean, again, if you have a $2,000 mortgage payment, and if you have to tack another $100 a month because you did 6 months, or another $1,000 a month because you did 6 months of not paying, yeah, I don't know. I couldn't pay 1.5 more than what my mortgage is.
Yeah.
It'd be painful. So
yeah.
I mean, I don't know. We'll see. See what happens. I hate to say that, but kind of, some of it's wait and see.
Yeah. Yep. Okay. Next question. Did I get? Okay, we had that one. I think we already covered that one. Yep, we already covered the question, so we're good there. So anything else that people should know or cover on forbearances? I had something, but I lost it.
Yeah, if you can, just research. If you have any questions, whoever did your mortgage, try to find them, call them up, send them a mortgage statement, have them look over it. Have them see if they can give you some tips and some, because they're going to know more about your specific loan and where you are. One thing that we as loan officers that is making it a little bit difficult, and we're getting hit with, is if you go into default or forbearance 6 months after you just got a mortgage.
That's what I was thinking, and I was just writing it down. It came back to me, but you're covering it.
If you do, our paycheck gets taken back. So, which is kind of painful if that happens, because we do our best, we make the guidelines. We didn't know any of this is going to happen, but it's interesting that we're getting penalized because an unseen pandemic, and
yeah,
it's
I don't like it.
No, but yeah, that's how it gets taken back from us. And
Yeah, because they make their money and they figure it out one way or another. But yeah. So just know, yeah, if you go and do forbearance right after buying a house,
Yep.
6 months, then your loan officer that worked their tail off for you.
We do work a lot of hours.
You do. There's a lot of paperwork. I think about the clients and all the different, we're buying this house. We need a, pre-approval letter. We need the documents for this. We need the breakdown of this. How much for this? I mean, going to them a million times for different, facts and figures and what does this mean and how, yeah, you work hard.
It's a lot. It's a lot. It's a lot of education. It's a lot of math. I like that part, but it's definitely long hours. So every loan, it takes us a lot of time. You don't see how much we do behind the scenes and how many hours. I think for the last month straight, I've been working till midnight and getting up at 6 a.m. and I sit in this on my little stress ball all day.
Yep. That's what I have at my desk.
Yep. I'm sitting here all day long. My sweet children bring me my breakfast, my lunch, and my dinner, and they understand.
I get up to go sit at the dinner table with the family, but other than that, yeah, I'm in here.
Sometimes I do, sometimes I don't. They're understanding.
Yeah.
Thankfully. But yeah, it's a lot of figures because for my clients, and most loan officers do this. If you have a house you're looking at, and I like my clients to be payment sensitive. If you're going to go look at a house and your sales price, if you keep upping the sales price and you want to know what that payment is, because maybe you were comfortable with a $2,000 payment, but you fell in love with a house that their taxes make your payment $2,100.
Right.
So, we like to make sure, are you okay? Because as we know, property taxes are always going to go up. Actually, not always. I guess 2019, mine went down. Majority of people, depending on the levies, but property taxes going to go up. So you want to make sure you're at a very comfortable payment. So I have my clients constantly, hey, we're going to go look at these 4 houses and to run payments on 4 houses so that they know tentatively what the payment would be. Yeah. So you can compare apples to apples because, again, if you go, of course, everyone's going to love a house that's, $500,000, but nobody likes that payment. So it's always good to see what it is. And yeah, right. No one likes that payment. So it's always good to run those numbers and make sure, because you don't want to be surprised. And we do our best. We get estimates as close as we can, but there's things we can't control. You pick your insurance, the homeowner's insurance. So depending on your deductible and how you structure your insurance, we might typically see $70 a month for insurance for that particular house, but you put extra bells and whistles on your insurance, which is great. And your deductible maybe only $500, but now your monthly payment for that insurance is $100 versus $70. So I always tell them there's numbers in there that I have no control over. I'm taking a best guess. You have control over these. So we try to be conscious of your payment.
Yeah. Yeah. Well, it's important to know that up front, this is where I think my budget is, and this is my monthly budget, knowing that from the start is very important to know, I think, because you don't want to get surprised, and knowing what you're going to have to bring to the table with your down payment and all the closing costs and prepaids and everything that goes into buying a house. It's not just about, I think most people just think about, I need to put 20% down, 10% down, 3.5% down, nothing down. Well, even on nothing down, you still have your closings and your prepaids. And those are not a couple $100.
And I've had people ask me, well, can't I just roll that into my mortgage? And no, you can't.
Yeah.
Years ago, there used to be loans that were like that, where you bring your closing costs and your prepaids into your mortgage, but then you're upside down in a house.
Right.
It takes a long time to dig out. So I'm glad they did away with that, to be honest.
Yeah.
We don't want you upside down. My dream is my clients get to the point where they pay off all their mortgages and they don't need me because they paid their mortgage off. Not a popular belief in the industry, but that's what I want. I want my clients to pay off their mortgage. I don't want you to have a mortgage for 30 years.
Yeah.
Make extra payments so that you're not in the situation where you're, living paycheck to paycheck for a mortgage or for rent. I mean, the nice thing about a mortgage payment is you can pay it off. And when you don't have a mortgage payment, you don't have to work as hard. You can play. I mean, if all you're paying is your taxes and insurance on a house, that's my goal. I want my clients to have freedom from a mortgage payment. I don't want you to keep refinancing. I want you to pay off the mortgage. And it's something you can do if you discipline decisions. So, so that you're not in the position to deal about forbearance. You can actually have your house paid for.
Right. Yep. Yep. Okay, so we're gonna go live every Friday. We would like to get people's opinions on best time. I think we're thinking now a little bit later, like 3 o'clock, but we are open to ideas. And we're also open to ideas. We have many topics in mind, but if there's anything that people watching want to know about, we would love to hear, and we like to cover topics, of course, that you want to hear about. That's why we're here, to answer your questions and help you along the way. So reach out.
Ask us questions, tons of questions. I want everyone to just ask questions galore so that we can answer them here and make you again, you might be closer to actually buying a house than you think. You'd be surprised.
Yeah.
Anything that I can help you to get into a house, again, because a house will make you money. I mean, it costs you money a little bit, but at least it's yours.
Yeah.
And it's, you can do it the way you want.
Yeah. It's a whole different feeling to you as a person too when you're in your home. Even if it's not your dream home, it's still yours. You know? Yeah. That pride of ownership, and I did this, and yeah.
That's part
we want everyone to feel that warm and fuzzy.
It is warm and fuzzy, and it's a lot of work, but it's also a blast because you're like, well, this is my house. I can do what I want. I don't have to ask the landlord, can I plant this tree, or can I rip this tree out, or can I paint that wall bright pink? I mean, it's your house. Do what you want.
Yeah.
Please don't do bright pink.
Maybe a bathroom. You can have pink in the bathroom. Anyway, so yeah, so let us know what you want to hear about. Let us know if you have questions. We're here. Feel free to comment. Feel free to call and message either one of us. I will make sure and put our contact information in the comments as well. But we're more than happy to talk to anybody and everybody and answer any questions and help you all out. And we understand people that are having to go into forbearance, like we talked about earlier, choosing between paying your mortgage and feeding your kids. It's a no-brainer that obviously you need to feed your kids. So we understand the tough times, but we hope that this was helpful information. And again, please let us know if you have any questions. I'm Jessica Hines with eXp Realty. Thank you, Angela with Stearns Mortgage. Appreciate it. We'll talk to you guys soon. Thanks for watching.